should you be investing in gold right now? Well, here to talk with me about that is Tim Kenny from Pacific Wealth, who recently wrote an article about this very topic for Retirement Daily. Tim, welcome.
Thanks, Bob. Thanks for having me.
Pleasure. So there are lots of good reasons why people should be investing in gold right now, and there are some reasons why they may want to avoid it as well. Is that right?
Right, and it's funny. I don't know why, but gold happens to be probably one of the most polarizing asset classes that's out there, and people have strong feelings one way or the other. And as I've been fielding questions, I just thought I'd present something, hopefully that shows both sides of why you might want to invest in gold, why you might want to consider doing something else, depending on where you fit on the spectrum, and really give some people some background to make a good decision for themselves if they want to add it to their retirement portfolio.
All right. So do you want to cover the reasons why someone might own gold or buy it?
Sure. And I think first two reasons I think are not just for right now, but kind of are not time dependent. Gold has always been a very good asset class for portfolio diversification. So when you're putting together a portfolio, stocks, bonds, different asset classes within those categories, you want some assets that are going to do different things when other assets, when one zigs, you want one to zag to give you some diversification. Gold doesn't really have a whole lot of correlation between either stocks or bonds. So when you add to a portfolio, it does do a very good job with overall diversification. And also when you think in times of crisis, fear, uncertainty, one of the first asset classes you usually think about are gold. Gold tends to do very well in those circumstances, and those are regardless of time. But as of right now, I do think that the reason why so many people are gravitating towards it, why it's getting some interest. Right now in this country, we have negative real interest rates. And so what I mean by that is you take an interest rate on something like the 10-year Treasury, which is something like a 0.65, let's call it. And then you factor in inflation, which is, let's just call it like 1.5. So roughly you're losing to inflation about 1% a year investing in a 10-year Treasury. So we have negative real interest rates. In fixed income, if you look around the country, around the world, they have negative, without even factoring in inflation, bonds are yielding negative interest rates. So when you see that start to happen, gold tends to do very well. And that's why I believe if you do think that, interest rates are going to stay probably fairly low. Fed has said that they're going to keep rates as low as they can keep them. If inflation does continue to maybe start to go up, I can see why gold could do really well here.
So just as a point of reference, most people I speak to about this topic in terms of how much of your portfolio to allocate to gold, many times people say no more than 5%, and certainly not much more above 10, if at all. Any thoughts about how much someone might allocate of their portfolio to gold?
Right. Yeah, good question. I think that that's where it gets really difficult because I've seen these allocations where you say, I'm going to just put 2% here or 3%. You have to ask yourself, is that really going to do anything? If gold does really well, gold does very poorly, is 2% really going to make a difference? I think it's like you said, it's somewhere between 5 to 10%. And I would also argue that it should be considered for somebody that's got some kind of a risk appetite. Gold's more volatile than people might think it is. It also, in times of stress like March of this year, even back into 2008, when people need cash, they sell their stocks and, you kind of move down the list, and gold's up there because it's liquid and it is somewhat volatile. So when you do think about allocating that, between 5 to 10%, you do need to realize that you might be adding more volatility to your portfolio than you might think.
Right. And then in terms of the actual investment, ETFs, bullions, something else?
I think ETFs just, there's, like I said, they're so liquid. You can get exposure very easily. There's not the fees are one part of it to consider, but just the fact that you don't have to go down to the local pawn shop and sell it. I do think that, at least if you're looking to add it to a portfolio, that makes the most sense. Where if you do use it as more of a collectible, you put it in a safe somewhere, you do have those added storage and buying and selling considerations to consider. So I'm more of a fan of the ETF myself.
All right. So you want to cover the reasons why someone might not invest in gold now or trim their holdings?
Sure. So I guess the first thing that always to consider is gold doesn't have, I mean, as we know, it doesn't create, there's no cash flows, there's no dividends, there's no interest like a bond. If you own a portfolio of fixed income or dividend paying stocks, at the very least, those are trying to at least generate cash flows or pay dividends. Gold can go through these periods where it just is dead money. The 80s and 90s were not a good time for gold, and there's no guarantee that gold is going to continue the price of gold is going to continue to go up. I included a couple of Warren Buffett quotes because I thought they were very interesting. But he basically said, gold, we go to another country to dig it out of the ground, bring it back to our country, dig holes to bury it in the ground and pay somebody to watch over it. I mean, that's gold. And so you have to really consider that if that's really something that you want to invest in. And then, I'd already talked about it's a somewhat volatile asset class. And then the last part is, a lot of people are talking about inflation and whether or not gold is a good inflation hedge. I would argue it's mixed. In the 70s, it did very well. 80s and 90s, we did have some inflation in this country, and it didn't do very well at all. And so if inflation is your number one concern, I think gold can do okay. It's just the history is a little bit mixed on it. Asset class like tips literally are for that purpose. Even sometimes good old-fashioned stocks can at least nominally keep up with inflation. So if you're looking for inflation as a concern, it could be, you could be disappointed in gold going forward as it performs if inflation does occur, and gold just kind of happens to stagnate.
All right. So I know the focus of your article was mostly on gold. Any thoughts about the other metals, silver, platinum, et cetera?
Not really. I think gold is just the one where it's part currency, it's part commodity, it's part religion. I don't know that silver. There's probably more of a commodity component to those other metals. I don't really have an opinion, but by all means, there's an ETF for anything these days. So I would just say do your homework.
All right. Thank you for sharing your thoughts about the article you wrote and this topic. That's much appreciated.
Great. Thanks for having me.